Good morning, folks. This is Johnny Seville from Acorn Wealth Corp here, and wow, another great day in the market for the shorts yesterday. We've had a terrific breakdown here on the S&P 500 again. Obviously, this is. Oops, let's go to the daily chart there. Obviously, really nice second day down, continuing its decline from that inverted fallen angel, which we've been talking about for the last few weeks. And as you can see, that has dropped now to a possible support area. So let's just examine this real quickly, because obviously the S&P has been in that free fall from the breakdown from this top that we've been talking about there in Trading Room. And I just wanted to show you, if we go here to the 1 hour chart. Uh, Okay, so obviously there was the, uh, just zoom out a little bit further. There was the upward channel here, right? So that you can see this blue line and this blue line. There was the upward channel, and that broke down beautifully. Then within the upward channel, we had the head and shoulders here, the left shoulder, head, right shoulder. That's how we were able to predict that beautiful timing of the top. And what you can see now, if I'll just go to a 4 hour chart. There we go. Just take that out to a 4 hour chart just to zoom out a little bit, but while still keeping some of the detail, you can see that there's a possible downward neckline head and shoulder built on the S&P, because until we find a support area where we bounce off, it could just keep free falling. But we've got to be looking for these possible areas based on the previous price action. So based on the channel, there was a possibility that we were going to bounce there around 32.50 and create a right shoulder. Instead, we cracked through that support. So the next level of support is kind of where we're at now. You can see this support, this support, this support. If we connect all three of those bottoms, then we get this support line. And if we put a parallel line here, that also makes sense. It connects that resistance, and that support. So there's another possible area we could bounce today. We may it may try and bounce up to around this kind of 32.07 mark. I wouldn't expect anything more aggressive than up to 32.20. But kind of 3,200 to 32.20, that kind of area. It's possible. Again, it could just keep free falling, but there's going to be some kind of short covering at some point. We just again, it just depends. The support of the inverted fallen angel at this point isn't really until kind of 3,000, right? So there's really that upward channel support isn't in play there until another 140 point drop. So and again, it could easily reach there today or tomorrow. Again, we are still in a bearish S&P 500 signal. So when we take a look at our S&P 500 signal, once again, we can see that based on the rules used to generate these signals, you can see that once again, it has been unbelievably accurate, just absolutely unbelievable. So once again, the S&P signal is correct, and we are in this free falling S&P market. And there you go. There's the bearish money flow down the bottom, also confirming that as the index went higher and higher, smart money was selling off, going lower and lower. I mean, you couldn't have gotten a more beautifully predictable crash when you follow the smart money rules. So once again, for those of you who are just joining us as newer students in the last few weeks, again, look at this. Unbelievable. You got the pattern bearish, an inverted fallen angel told us to be looking for the shorts. The head and shoulders created on top of the channel, bearish, told us to be looking for shorts. The money flow, the smart money going out of the market as the market goes higher. What does that tell us? Bearish. The S&P 500 indicator, which has almost a 93% track record over 60 years of being correct. What did that tell us to do? Bearish. What did the pattern on the S&P 500 tell us to do? Short, but upward channel on the hourly chart, head and shoulders on the hourly chart going into Friday. What did that tell us to do? Bearish. Let's take a look at stocks above or below the 50-day moving average. Right? What did that tell us to do? Well, since January 17th, telling us to be looking for shorts, bearish. What did high yield bonds do? Right? High yield bonds, as we've been talking about since we started, since we identified this upward channel back in again on January 17th, and also all through last week. What did we say? High yield bonds, upward channel, bearish. I mean, here's the thing: everyone's talking about how surprising this crash is this week, and how it's come out of nowhere, and how we're going to blame it on the coronavirus. But this has been building. This was being planned, and everything warning us that this was going to happen has been around since the beginning of January. This has all been building for a long time. The coronavirus is just the catalyst. And if it wasn't going to be the coronavirus, it would have been something else. The market was waiting for a catalyst. It was preparing for this move regardless. It's just this is what's happening, and that's causing how quickly it's moving. So again, I really hope you're enjoying being on the right side of this. And I really hope that at the very least, you protected a whole bunch of money by being able to follow us over these last few weeks, warning that this was coming. But there you go. Look at all those smart money signals all lining up so beautifully well. Look at the Russell 2000. Right, look at the Russell 2000. There's the head and shoulders there. Right, so you can see again, there's an argument for a possible bounce here today or tomorrow. You can see that the Russell 2000 is also sitting at a support level. Now the selling pressure in the market right now is pretty significant, so it's possible that we just continue um, further down. But if it was going to bounce, this would be kind of the place where it would want to do it at. So there's the Russell. You can also see that cross section of support coming from these previous areas of July and September. So we're going to try and bounce here today. If it just free falls, and it free falls, but just be aware of that. We've also got XPH. You can see on the S&P Pharmaceuticals. You can also see the head and shoulders here, right? There's the head and shoulders on the pharmaceuticals. So that still has more room to go easily until you kind of reach your first target, right? You'll find some support will happen here around 45.20 to 43 on the pharmaceutical sector. That's still under the bearish pressure. You've got so I mean across the board. Let's go back to the charts here though. But yeah, that's what I'm saying on the S&P 500 is that again you can see that here also, right? There's that possible head and shoulder, but really there's the key support in this downtrend isn't going to be till 3,000. So you may get a rally today. We may get a bounce. At the moment, the market's up 1.3 points, which is really nothing, but just watch for that early price action to see if it's able to bounce up towards that kind of 32.10 again, to 32.10 to 32.20. Again, I wouldn't be chasing that rally. I would not be going long into that rally. That I would be using that to as an opportunity to take short positions or to exit long positions, which we've been doing since, of course, last week. So there you go. There's the S&P. Now, a quick couple of updates. GLD. Let's just have a quick look at this. GLD has continued to start to fail, so it's pulling back after that beautiful rally to a high in Monday's trading. Now GLD has been on a beautiful run since we first alerted it. So again, there's been lots of profit taking opportunities. I'd still consider taking profit if you haven't already, but I would look at updating the stop loss to 149.13. MTEM, I would update the stop loss to $15.93. Right, lock in some profit from that first entry signal around $15. This is not a market I'd be confident being long on really anything. I mean, as I mentioned last week on Friday, I mean, I was even selling CYCN, which is one of my favorites, just because everything's looking so bearish. MTEM, there's 5093, yes, so VERI, again, one of my favorite stocks. It's actually held up very well considering Of course, this is up from our entry signal around $2.30. So it's still got lots of profit in the bank on this trade. So this is one of my favorite longs. But again, I've already liquidated half on VERI, and that was up when it was around $3.20 or whatever last week. So from $2.30 to $3.20, I'm already very happy with this trade, right? So keep in mind everything I'm saying here on this stock is within the context that I've already banked a nice profit on that. And if you sold some today, you would already be banking a nice decent profit. So we've got profit to play with here. But with VERI, you can see that there is this kind of potential again head and shoulders on the hourly chart. It could be that angle. It could be there. It's a bit messy. So with VERI, I'm going to set my stop loss at 279, which is just underneath this possible neckline that could be there. So I'm going to give it that little bit of room to move, so that if it drops and bounces back up as a head and shoulders, I can get a better exit price. So that therefore, what I'm going to do is I'm going to set my profit target to $3.18, which is right here, and move my stop up to $2.78, and that way I can because a stop loss should always be under support. That's where possible support is based on that potential pattern, 278, and then lower my target to 318. Now, if the market then suddenly recovers and we get a bullish open range in March, um, if that happens, then different story. Then we can get back into this. But the risk on the longs right now, while we're in a bearish S&P signal and in a very bearish series of patterns all across the market, until that changes positive, there's just no reason to really be long here. You're just fighting such a significant downward pressure on all stocks. So that's what I'd be doing on AMRX, on VERI, sorry. One of the now, I do like to hold some longs. I shouldn't even say some longs. A little bit of exposure to the long side. As I mentioned, there's a couple of things I am holding. AMRX is one stock that I'm holding, and will continue to hold unless it stops out, because I've got a lot of exposure to the short side now since Friday and Monday. Uh, I'm happy to have a little bit of exposure to the long side, even if it means holding a losing position, because there's enough profit being made on all those shorts, especially like the puts on HYG and Boot and the Crocs, and some of the ones we'll talk about in a second, that I can afford to hold a loser um, in the event that something big happens. So I'm not going to hold a loser that just is, kind of just any old average trade. The only reason I'm holding on to AMRX is because it has such massive insider buying, right? Remember, AMRX has substantial insider buying, 819%, 400%, 228%, 4.9 million here at 10%, 900%, 184%. Some new buying. Like it's just very interesting. It reminds me a lot of some of those stocks in the past that just went like gangbusters. So that's why I'm holding it. It's like because potentially one day suddenly it gaps up to $14. It's a big win. So the potential, because it's a pharmaceutical with all that insider buying, is why it's a special situation. I wouldn't be holding just any old stock like Tesla or Netflix or stuff like that. This has got big insider buying. It's got an interesting pattern, and as you can see, it was actually up 7.2% yesterday, and it's up another 3.99% in pre-market trading today. So it's got some good things going for it, and a lot of insider buying. So I'm holding that. That's one of the longs I'll hold, even though it's a very bearish market. Uh, so that one, just keep your eye on that. MRNS is actually holding up extremely well given the market conditions. Again, this is something that has already hit its profit targets, so I certainly would have wanted to have taken at least 50% of the profit on this position. But I would consider moving the stop loss up to 247 on the rest, just to lock in that move. If it continues to break, great. If it doesn't, it doesn't. It's a big win already. ITCI, I would set the stop loss here at $20.97, or just get rid of it. It really hasn't dropped much from its entry signal. I mean, we wouldn't take a new long today. So, I mean, if I was in this, I'd probably just get rid of it. But if you wanted to hold it, 20.97 as a stop loss. Um, ADXS, same kind of thing. It's too scrappy right now. I'd probably just get rid of it. But if you wanted to hold it, I'd look at a stop signal around 84 cents. It's just, I mean, compare this to any of those. You just got to think, looking at this stock, is this the best place to make money today? Probably not. Okay. VTVT. VTVT. If you haven't taken some profit on this already, I would consider taking 50% profit or so. Again, you've got to make your own decision. I'm just telling you kind of how our technical analysis rules work. So if you, I mean, and how it by kind of from a position sizing. But again, we're not financial advisors, so you still have to make your own decision, just as the disclaimer says at the beginning of the show today. Yeah, VTVT, I'd consider taking, say, half the position, and then just moving the stop signal up to 297 to protect the entry. So it's just an idea there. And and the stock is currently $2, $3.29 in pre-market trading. So it's up very nicely from that $3 entry signal of almost 15% move. So in a bad market, this could continue to go. Lots of insider buying, but that's kind of how I look at that. Pets. Now, so this is an example of just an average stock. There's no insider buying on this one. It's held up very, very well. It's considering the entry signal was around $28. We're sitting at 27.75. There's really been no money lost on this, and so there's an opportunity here to get out unscathed, considering the market conditions. So that's probably what I would do. Uh, Now on the short side, HYG, of course, has done incredibly well. So those puts that we loaded up on last week, which we alerted you to, HYG, I'd consider taking a small amount of profit. Again, they're up close to 95% from where I bought them at anyway. So almost 100%. On those options. So I'd consider a partial profit take, especially if you drop down to around 86.37. You can see that's going to be where the support is of that possible head and shoulder. So if you have a look at that, you've got head and shoulder on high yield bonds. The neckline's coming down to here, 86.37, 86.40. You've also got the upward channel, right? A second here. There we go. You've also got the upward channel support at the same place. Now, so that could get a little bit of a bounce up to around 87.37. And then if it creates a right shoulder and breaks down from there, of course, the longer term target's going to be a more serious breakdown, right? So in terms of the break on high yield bonds, we're looking at a longer term target of, say, 84.53, right? So just check that one out. And then, of course, that could break much lower than that, but that would be the next target. So we're pretty close to that first target. There's a possible head and shoulders. There's certainly the upward channel support. So I'd consider a partial profit. If you're a more active trader, you could take it all and look for a re-entry, either when it rallies back up to 87.40, or when it breaks, or if it doesn't rally up there, you can obviously re-enter as it breaks through the channel. So the big test, we're at an important test for the market and high yield bonds, because we could bounce here short term, but remember that is a bounce in a bearish pattern. So check that out on HYG. Of course, we get a little bit more insulation from market moves when we look at individual stocks, because the market could go up and the individual stocks could just continue crashing. Match MTCH is one of those scenarios. It's heading towards its first target here. However, it could easily go lower, so I wouldn't be selling all of it, but that one's looking good. Boot. Boots also another example. It hit its first profit target yesterday, um, right there on the nub. Perfect, 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 perfect drop. Options, of course, did extremely well. The put options we suggested, so I would look at lowering the stop loss here to 33.37 and let it continue to drop, now with a momentum target. EAF, Head and Shoulders. This one's looking beautiful. It's heading down towards its targets. It's got plenty more room. It could drop from $9 to say 773 and 657 being the next two targets here. So EAF is looking good. I would lower the stop to 1054. MXIM hit its first target yesterday at 58.13. Again, beautiful upward channel, looking really, really good. So look, this one would have a new potential entry if it breaks below 56.67, and I'd consider a new stop signal of 59.23. The next target is $50.27, and then momentum from there to continue dropping. YETI, this is holding up really nicely so far. Now on YETI, it hasn't yet broken down, so this is kind of going to be one of these kind of phase two shorts. Now I'm already in this one, but as you can see, there's actually a possible head and shoulder here, right? It's also got an upward channel and a larger rising wedge. So there's three bearish patterns on Yeti and insider selling. So if this was to actually rally up here to 34, basically to kind of, let's have a look, 33.68 um, to 33 to 34.17, that would be a new potential short entry because it would be creating a beautiful right shoulder. I really like that as an entry, even though it means losing, possibly 10% as it rallies. That's okay, because if we were to lose money because Yeti rallies up to $34, it's actually creating a beautiful bearish pattern. So it's short-term pain for long-term gain. So I'd actually consider adding more to my position at 34.17 because that pattern would then be an almost perfect head and shoulders with a downward with an upward channel and a rising wedge, three bearish patterns in one. So check Yeti out. Also, if it were to break below 29.34, would also be a potential new entry signal. And my target on this is really looking for a drop down to that 17.33, but would take a tiny bit of profit at 26.37. We've also got FHN. FHN I really like. It's this, again, if you remember, FHN doesn't have insider selling, but it has, it's this nice upward channel, and then it has a head and shoulder here, over here on the right hand side. There was just head and shoulder after head and shoulder after head and shoulder. Look at the original alert on this in the customer portal, which we sent out last week. But I still like this. And remember, on the weekly chart, there's also a head and shoulder here. There's so many head and shoulders in this chart, it's crazy. So this could drop all the way down to $6 and change. So FHN, I still like this a lot. If you missed an entry on it yesterday or the day before, you could still look at any rally that happens today up towards $15.40 as an opportunity to enter. And I'd set the stop loss at 16.32 with a longer term target of $6.57. Um, Last couple, BKR. The options are up close to 50% already on this. So again, you could consider it like a third profit take, but it's easily going to drop lower. Yeah, nothing wrong with 50% in 2 days. But I look at a stop loss now of $20.56. So that's it for today. Let's wait to see what happens as the market possibly rallies. There is one new position that I took yesterday that still looks good, WWD, just because I wanted to get my largest position right now is in the HYG puts. So I just wanted to get a little bit more exposure to some individual stocks because the HYG is going to be more market correlated if we hit a key support level. But so I just wanted to get a little bit more exposure to some individual stocks. We've already got so many, obviously, that we published in terms of the short opportunities. But just keep an eye on WWD. If that breaks below 111.84, that could be a nice short. And you can see that head and shoulder there with the divergent money flow. So check that one out. I'm already in it, but 1113, 111.84. I'd be looking at, and I would consider a stop signal at 1118.56. Now I would be looking, this is a momentum play to the downside because it's come a long way up. So I would just be letting this free fall. The head and shoulders would just be the potential top of the chart with downward moves to come. Okay. So that's one new one you can set up, take a look at. Of course, we did suggest some new entry points as well on those existing shorts, so check those out as well. If I find any other really great opportunities, I'll let you know, but I'd like to see how the price action goes today, given those key levels of support we're at. So have a wonderful day and happy trading, everybody. Cheers.